So this channel is an outlier in the crypto YouTube space, so research is on another level. I don't try to do technical analysis, and our Tyler analysis beats the other YouTubers' technicals a majority of the time.
Descend in triangle. Line here, line there, lines everywhere.
And finally, we uncover and investigate the nasty in the space.
Don't wash your hands, that's nasty. Don't bring your pants, that's nasty. Don't wipe your butt, that's nasty. You finna nut, that's nasty. Gross.
So are you ready to hear something that some might not want to listen to? Well, open those ears and really pay attention, because it's time for Chico Crypto. So if you have taken the time to really listen to this channel, you would have heard a term I've coined and said on many occasions, that this cycle is the last hoorah. Can I get a hoorah? Hoorah. So what is this last hoorah? Well, Bitcoin runs in 4-year cycles based on something called the halving, where the number of Bitcoin emitted to the miners is cut in half. Within these cycles, we have bull and bear markets, and each takes about 2 years. And every one of these cycles since Bitcoin's creation in 2009 has a hoorah at the end of the bull market. This is the parabolic run, which happens near the middle of the cycle. Beginning of 2011 had its hoorah up to $29. End of 2013 had its hoorah up to $1,135. And 2017 had its hoorah up to near $20,000. Thus, the hoorah is a cycle's peak, and pulling out this hoorah's percent gains compared with the last cycle at the end of 2017, you can see we haven't even got started yet. There is still a ton of hoorah to go around. Can I get another hoorah? We haven't even started the parabola, which people are predicting the peak to be around 100K or even as high as 325K for this hoorah. But going back to that chart, we can see that after the parabola peaks, there is a very significant crash, aka the bubble burst. First cycle from $29 to $2, a crash of over 93%. Second cycle's peak of $1,135 down to $176, a dump of 84%. And finally, the third one from $19,461 to $3,185, a smackdown of over 83%. This cycle will be no different. There will be another massive crash, 70% or above, no problem. If you didn't know, we just had a mid-year crash where the price went from $63,500 down to a low of about $30,000, a devastating fall of over 52%. So an over 70% crash for this cycle's bubble burst is extremely likely in my opinion. So will it be like the last two cycles' falls of 83 and 84%? Those two are extremely close to each other, so something like 80 to 82%? You would think that was just a first look, but actually I think this one will be different. That is why I call it the last hoorah.
Am I right, Marines? Sir, yes, sir.
The last one because there are two entities critical and crucial to the crypto markets who both could go down, resulting in the biggest crash since 2011. Shoot, even depending on what happens, if they go down in succession, it could result in a crash that equals 2011 of over 93%. Who are the critical entities I'm talking about? Well, the heart and the blood of the crypto markets, Binance and Tether. So I don't mean Binance is the heart in a good loving way. I'm comparing it to how that organ functions. Binance pumps many tokens in the crypto markets, including what drives all tokens, Bitcoin included, and the blood of the crypto markets, Tether, is used to do just that. Checking out CoinGecko, Binance yesterday was doing over $22.6 billion in 24-hour volume. The next 11 exchanges ranked don't even come close to that. And actually all those other top 11 combined only equal about $16.58 billion. Binance still does over $6 billion over them, even when you add up all of the top 11 centralized exchanges combined. Now, what crypto do you think is basically a part of every top trading pair on their website? Bitcoin? No. Binance's own stablecoin, BUSD? No. As we can see from those top pairs, the blood of the crypto markets is Tether, and an actual breakdown of Binance's total volume shows it's 86.2% Tether. Every other currency on the Binance exchange, all other 333 coins, including Bitcoin, Ethereum, BUSD, and more, only make up 13.8% of the volume. That means of Binance's 24-hour volume, which was over 22.6 billion, 18.66 billion of that involved Tether. So the Tether volume on Binance alone is more than the top 11 other centralized exchanges combined, who only do 16.58 billion, aka more volume than US dollars, Bitcoin, Ethereum, other fiat currencies, and all other altcoins combined across 11 of the top exchanges. Tether is the blood of Binance, but it's also the blood of the crypto markets. Going to CoinGecko and the top 100 cryptocurrencies, if we sort by 24-hour volume, we can see Tether jumps to the top. Over $62 billion traded with Tether in just a day, and its next closest competitor, Bitcoin, only has over 34 billion. Only 91% more volume than Bitcoin. Nothing to see here. So if Tether is the blood of crypto and Binance is the heart, then Chico Crypto is the eyes. So let's first eye Binance. I've been on their snake of a trail for a long time, uncovering their early pump and dumps, Americans able to trade on their exchange, no KYC, crypto manipulation, bullcrap charity, and love for power in these markets. And a lot of that continues to this day, which has Binance in hot water with the good old US of A. Hoorah! In May of this year, it was announced that Binance was being probed by US federal agencies. As we can see down in the Bloomberg article, it says, Binance Holdings is under investigation by the Justice Department and Internal Revenue Service, ensnaring the world's biggest cryptocurrency exchange in US efforts to root out illicit activity that thrived in the red-hot but mostly unregulated market. As part of the inquiry, officials who probe money laundering and tax offenses have sought information from individuals with insight into Binance's business, according to people with knowledge of the matter who asked not to be named because the probe is confidential. When this news came out, I knew that it wasn't going to end up good for Binance. BitMEX, the former heart of the crypto markets, who dominated during the last cycle, had the same thing happen to them. Just a probe, but just over a year later, their founders were charged with illegally operating a derivatives exchange and anti-money laundering violations. So what do you think happened since May? Binance was able to squirm their way out of this one? Haven't heard much about it, huh? Well, last month, this news didn't get the airtime. It was announced September 17th that the probe had expanded. The Bloomberg article states, U.S. investigations into Binance Holdings have expanded, with authorities now examining possible insider trading and market manipulation. The review involves Commodity Futures Trading Commission investigators, who in recent weeks have been reaching out to potential witnesses. The Commodity Futures Trading Commission, the CFTC. Why is this agency important? Well, if you go back to who charged BitMEX, it was the CFTC. Regulators! So things are not looking good for old Nancy boys, and I'm predicting they will be charged. Things are happening just like they happened to BitMEX. This will be the catalyst for this cycle's bubble to pop. But what will be the reason for it to dip 93%? That comes down to Tether USDT. The blood of the crypto markets will bleed the crypto markets. And I've been on Tether's trail too for a long time, covering who is really behind the exchange, the web of secrecy with their banking relations, the downfall of those relations, their battle with the New York AG, the mystery of the one-to-one USD backing of each USDT, and their involvement with China, and even more. Now, I could go down that entire rabbit hole one more time, but it would take me multiple videos. So if you want to learn about the history, I've included a group of the most important Tether videos below. Although just 4 days ago, the news started to swirl against Tether once again. Bloomberg dropped an article titled "Anyone Seen Tether's Billions?" which is a detailed piece of Tether's history, its banking relations, and asks the question, where is the money? That is included below too if you want to check it out. But here's the piece from the article we need to read. The author states, "After I returned to the US, I obtained a document showing a detailed account of Tether's holding reserves. It said they included billions of dollars of short-term loans to large Chinese companies, something money market funds avoid. And that was before one of the country's largest property developers, China Evergrande Group, started to collapse. I also learned that Tether had made loans worth billions of dollars to other crypto companies with Bitcoin as collateral. Tether has denied holding any Evergrande debt, but Hogner, Tether's lawyer, declined to say whether Tether had other Chinese commercial paper." So what does this mean? Well, an Evergrande default in China could lead to a real estate default there, and then an economic bubble to pop like never before. Think China's real estate crisis and economic crisis like the one the US had in 2008. This means the commercial paper, the short-term loans, even if they're not Evergrande, is unlikely to be repaid by the Chinese companies Tether is involved with. This leads to a Tether default, aka the bottom of the bubble pop. Bitcoin down 93%. And you want to know what is suspicious as can be? Following the Bloomberg report, Tether's mysterious CEO, Jean-Louis van der Velde, deleted his Twitter, erasing his social presence. And here is his last tweet, screenshotted before it went offline. He said, "Another financial enslaved dying magazine trying to come up with some Tether FUD in order to bring in some bucks and delay its extinction for a few more days. Stay tuned." Well, stay tuned to what from you? You've disappeared. Cheers, I'll see you next time.